Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report so exciting it makes balancing your checkbook look like skydiving almost. We're looking at Orrstown Financial Services' latest quarterly report, and there's a lot to unpack from a surprising profit jump to some potential bumps in the road before we get started. If you appreciate these straight insights from corporate documents, be sure to subscribe and don't forget to check out the Discord server for behind the scenes discussions and community insights about us, linked in the description below. First off, a quick overview. This Form 10Q is like a financial checkup. It gives us a snapshot of Orrstown's performance and financial health as of March 31, 2025. Think of it as their way of telling shareholders and the SEC what's been happening. Alright, let's dive straight into the numbers. Looking at the balance sheet, total assets are practically flat around $5.4 billion. But remember, sometimes the devil is in the details. Cash and due from banks, that's their immediate spending money, jumped from $51 million to $64 million. Good sign. It means they have more readily available funds. Net loans, essentially the money they've lent out after accounting for potential losses, decreased from 3 tontots at Arlet $83 billion, a possible indicator they're being a bit more cautious with lending, or maybe just not growing the loan portfolio as fast. Now, this is interesting. They have a line item for accumulated other comprehensive loss. It's basically a giant pile of losses for things like investment securities and interest rate swaps. So it dropped a little from roughly negative $26 million to negative 20 vol million. Well, cress, I guess. Now, the income statement, this is where things get interesting. Check this out. Interest income from loans nearly doubled, jumping from $36.2 million to $63.4 million. That's a massive increase and definitely got our attention. But here's the thing, their interest expense on deposits also went up from $13.5 million to $24.30 onto those deposits. Overall, the net interest income, which is the money they make from loans minus what they pay on deposits, shot up from $26.9 million to $48.8 million. That is a 75% increase in what they earn on interest versus what they paid. Here's something interesting. They had a recovery on provision for credit losses. Basically, they got some money back they thought they'd lost from loans, negative $521,000. Salaries and employee benefits really jumped up, $13.8 million to $20.4 million, which suggests they invested a lot in staffing, or it could be part of those merger costs we saw at the top. Check this out, intangible asset amortization. Basically, the cost of using up some of their non-physical assets skyrocketed from $225 million. That's likely tied to their merger with Cadorus Valley. Zooming out on performance, their basic earnings per share increased from 41%, almost doubling, from 0.82 per share to 0.94 per share. Time to check the cash flow statement. Starting with net income of $18 million from last year, they also had a notable $61 million decrease in loans. And look at this cash used in financing activities. They are spending a bit. It looks like negative $12 million compared to a $114 million increase for the same time last year. Switching gears from the financial tables, let's look at something that's always worth a scan: significant accounting policies. This is where Orrstown outlines how they play the financial game according to the rules. They talk about acquisition accounting, which is how they handle mergers. They have up to a year after the merger date to sort out all the fair values of assets and liabilities they got in the deal. And here they explain their allowance for credit losses, loans. This is how they estimate and set aside money for potential loan defaults. It involves using data, forecasts, and a bit of educated guessing. The merger with Cadorus Valley closed on July 1, 2024, and Orrstown issued around 8.5 million shares to make it happen, with 49.4 million of goodwill. This is a crucial element in Orrstown's recent performance, which drove up revenues. They also obtained other intangible assets like core deposits worth a whopping $40 one that monetized through the years. The investment securities section is basically a deep dive into what the company is buying on the market and if they are making money from it. US Treasury securities are at $20 million compared to $2,712 of government agencies. A little bit more about the merger with Cadorus Valley. The closing market price of Orrstown common stock was at 27.26 cents. Checking the loan portfolio here for commercial real estate, they had $617.54 compared to $1,157,383 T$7.83 T$7.57 the third ever. Off-balance sheet risks usually entail something, but luckily in this case it does not seem to be a risk here. Checking the actual liability section as well, it only accounted to be around 82 million. It's good to see it's only a fraction of all assets. Now let's put it all together. Orrstown had a really strong quarter. The big jump in profits, while partially due to the Cadorus Valley merger, indicates they are managing to grow their core business. The increase in expenses from expansion is a short-term pain for long-term gain, if all goes to plan. The market risks are always something to keep an eye on, however. As always, their ability to successfully integrate the new assets and manage loan quality will be key. So what's the verdict? Orrstown seems to be sailing in the right direction. They're expanding, profits are up, and key financial metrics are solid. Alright, that's our breakdown of Orrstown's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.